Power launch West Africa, investors set their interest on the short-dated maturities in Nigeria's Treasury bills market as demand on the newly issued one-year bill surged. Yields for March 2026 and January 2026 bills traded at 19.1% and 22.7% respectively, with traders at Access Bank saying that they expect the market to sustain the sentiment today as investors deploy the available liquidity in the system. Uzor Anakebe, a Treasury Team Member at Access Bank, joins me now for a market update. Thank you so much for your time today, Uzor. And let's first get a sense of what we've seen play out this week so far.
Thank you so much for having me. It's been a long week for traders in the market recently. So opening liquidity in the Nigerian market, we saw the liquidity open at 900 billion at the beginning of the week, but yesterday's opening liquidity stands at 245 billion naira. This consequently led to the OPR rate and overnight rate decline by 26 and 33 basis points respectively to close at 27% yesterday. This significant decline would be attributed to the sustained FX interventions by the central bank, considering the tensions between the United States and China and other countries with regards to the tariffs.
All right, Uzor, I'd like to take you up on the intervention of the central bank and the likely impact that we've seen play out. And do you think we could see more of such interventions down the line if the naira is further stressed?
Yes, so on Friday, CBN released a press release confirming to the market that they are fully aware of what is happening in the global space regarding the tensions, and that as at Friday last week, they intervened about $190 million in the market. This significantly cushioned the effect of the depreciation in the naira. And we've seen throughout this week that CBN has been very active in the market. They have kept on pumping liquidity in the market and encouraging foreign investors on the market. So this has helped to keep the rates below 1650 levels.
All right, let me get your take on rates, because I've seen that despite the Treasury bills auction settlement, you're expecting a marginal decline in rates. And I'd like you to speak to that and what's driving that expectation.
Yeah, so the Treasury bills market has been very interesting. Opening the week, we've seen a lot of bearish run, and on the auction day, it was a quiet trading session as most attention focused on the NCB auction, where market participants anticipated that the rate would go up. However, the DMO capped the rate at the 19.63% for the longest maturity. This was the same rate that the previous auction was maintained at. So we saw this cause a reduced volume that was sold in the market on Wednesday. On Thursday, opening the market, we saw demand for people who couldn't win on this auction come into the market. However, there was limited supply in the market, but we have seen increase in demand in the March 26 papers and the January 23 papers, and this has been trading actively.
All right, let me get your take on the OMO maturities here, because I'm seeing that there's some renewed demand, more or less, for the January to February OMO maturities here. And I'd like you to speak to what's playing out there. Would you say that investors are shifting their strategy towards the short-dated papers?
Yes, so we've noticed that because of the feedback from DMO, because we've noticed that the DMO is not willing to raise rates up in the near term. So we've seen most market participants shopping for OMO bills which have improved their yields for them. So this is just a yield shopping strategy. However, we note that the foreign investors are still selling off their interest as they are taking their funds to safer havens. So that has also affected the FX market, like I mentioned earlier.
Yeah, but on the bond side, we're seeing an increase in activity there, and I'd like you to speak to what we're seeing play out, because we're seeing more that at the belly of the curve, the middle of the curve there, mid-dated maturities there being the focus there, and I'd like you to speak to what's playing out there and what's the appeal for these tenors at this time.
Yeah, so most of the activities were centered on the mid tenors, like you mentioned, the 2031s and 2033s. So what has happened there was that we've continued to see the portfolio investors taking profit and selling off their positions at that level. And there are some local interests there. So some of the locals are trying to increase their exposure on these mid-tenor securities. And if you know, the rates are very attractive at 20 levels. So we've continued to see activities on these papers. However, the long-dated papers have not been actively trading as expected.